Hey guys, we're here with the gold rush, and there's so much going on in the market today that we just kind of wanted to come out here and tell you guys what we're thinking, what's happening, and basically how you guys can either position in your portfolios to make money, hedge your portfolios, whatever you need. We're here to do it. We talk anything from currencies, precious metals, commodities. It's all here in one place at the Gold Rush. Today we're joined by Pat Dunwalla, and we also have Sam Gatlin, my co-host. So got a bunch of good slides for you guys to see today. So Patrick, how are you doing?
I'm doing great. Thanks for having me on.
I'm glad to have you, man. You and I talk about getting together more often, and we really should because I think you always bring something fun to the table. And I think we got a good conversations most of the time. And Sam's here, Sam as well. So how are you doing today, Sam?
I'm doing great. I'm really happy to be here with you guys, and I think I'm excited to have a conversation with Patrick. He has a really interesting perspective about the markets. He spends a lot of time on the Twitter and just has a really good feel for sentiment at all times. And I think sentiment's at a really, really interesting place right now.
And let's talk a little bit about that. Patrick, you just set off mic. I was talking about Costco. I recently got a card, so I can go to Costco now. My girl got a card, so now we're both on it. So it's great. But you were just mentioning that what is it called? The gold is sold out at Costco. And
Right, right.
true. Every Costco you go to, there's no gold there at the moment. That was a huge story about, probably a year and a half ago. Now that it's changed. So where'd you hear that, and what's the sentiment around gold on Twitter at the moment?
Yeah, I mean, it's interesting. It's kind of flip-flopped even in the last couple weeks, it seems like, first everyone got super bullish, and then you kind of had this, I don't want to call it a blow off top because I don't think it's totally a top, but I mean, it is really extended. And at this point, you're seeing a lot of technicians now getting a little cautious, seeing how much it's extended, how much it's run. And, the relative strength thing, I think that is longer term bullish for gold. Um, but you're seeing a lot of those stats now, right? You're seeing like gold outperforming S&P over a 20-year basis, things like that. So people noting that relative strength, it of course looks a little extended, but I'm
Let
sure
me
we'll get
ask you
into
this,
that.
Patrick. Uh,
Yeah.
do you see crazy overbought readings and downtrends?
No, you don't. Not usually.
It,
I
it's a
mean,
tough one
unless
here.
it's the start. Unless it's the start.
It's a tough one here because if you're looking at gold, it has a huge extended trend at the moment, and a lot of people have said it. But people have talking to Sam and I about it being overbought since it was all the way at 2,500. It's the trend was overdone. When silver going to catch up? Gold's done. It's long in the tooth. Peter Brandt had a post where it was, we can't get over 3,000 because gold always stops before big numbers. I mean, it was pretty endless, and then now we're kind of here above 3,300. I just like to say most of the time I don't know where this thing will end, but I also agree with you where like finally sentiment is actually turning into something in this market, so it is something to continue to pay attention.
For sure. All good uptrends need to correct. It's not healthy to go up in a straight line for too long.
And I will say it's a little bit of like disbelief, and it's not the type of sentiment that I would associate with a top. When I say disbelief, it almost seems like, people are seeing that it's extended all that, but I don't think a lot of people are positioned bullish gold. I think there's a difference between being kind of sentimentally bullish and saying you're bullish gold, but I don't think people actually own it in their portfolios and have participated in this run.
Jason, you were around back in 2011 when gold was making a pretty major top. What do you remember from then? Are we seeing anything similar today?
I haven't seen a bubble, that was a real bubble like that. Bitcoin was one. The meme stock phase was probably half a bubble. Yeah, it was crazy. Yeah, everybody shouldn't have been doing what they were doing. And then if you go all the way back to 2011, it was no, it was I mean, people were talking about ways to take their entire portfolios, put it into gold. This is also the time where a lot of those gold Roth IRAs and all these things started to come out, and everybody started to create gold products in the fiduciary world. So it was a very different type of environment. Not to mention, there was people just buying it, storing it anywhere. I mean, like in their ground, wherever it was, every friend you had was asking you about it. Everybody's dad. It's really interesting to just kind of see where it is today, and see that sentiment is nowhere near that overdone. But once again, it was a little bit of a different environment. So I'm not saying we're going to see the same run where we're going to see a 10-year run in gold. But I am saying that I don't think a top's here just yet. But we'll see if this thing really turns around. First, to me, it really has to turn around, start to break trend. Then I would start to say maybe. But Sam, actually, let's go to your chart number two. Number two. Yeah.
So yeah, here we have a daily chart of gold futures. I have it fibbed out from this peak, and I believe that was August 2020 to the trough a few months later. You can see that was a really well-defined range. You had multiple tests of support and resistance. And then you got the little shakeout before the breakout. You love to see that. A little bear trap to get things going. And you've just been in a steady uptrend since that bottom, which was in late 2022. And yeah, here you are hitting the 423.6 extension. And sure enough, the sellers have showed up right on time. This is no surprise to us chart watchers that analyze using Fibonacci extension levels. I was expecting the sellers to show up at the 161.8. Sure enough, they did. I expected it at the 261.8. Sure enough, they did. But look at how gold futures consolidated at those levels. The sellers showed up, but they didn't take control of even the short-term trend. It just churned sideways in a very constructive continuation pattern.
Yeah, so this is part of the reason why I wanted to bring this up now is we're talking about a top, and Sam and I have put this together over and over again. This is Sam's chart specifically, but we put this out every week at the Gold Rush, nearly every week. Just kind of talking about levels, and we did hit that level recently, and now we're kind of coming off of it. It makes sense for it to consolidate here, but consolidation doesn't mean it's going to break trend. It just needs to go sideways. I also think it's time that some of these other areas start to really catch up. Talking about gold miners, silver, platinum, these things really need to catch up. So I think it's a good time for this thing to start to slow down a little bit. And these other areas inside the precious metals market start to really take off.
For sure, Jason. We
What are
want
you
to talk to
seeing?
you.
I wanted to
Sorry.
ask Patrick one question. Sorry,
Yeah.
sorry, Sam.
Sure.
But Patrick, so what are you seeing about the gold mining space? If we're looking at gold miners, you're looking on Twitter, are people getting excited about it at the moment, or are people just like, yeah, it is what it is?
It kind of reminds me of where gold was back in, what was it, 2022 or 2023, when you tried to break out of that base so many times. I mean, we all saw that base forming, and it just got rejected 3 or 4 times over a 2 year period. So it had so many chances to do it, and it just kept failing. And I mean, a couple years ago, we were calling that gold chart the boy who cried wolf because every time it tried to break out, it just couldn't get it done. It failed so many times before it finally did it, and then once it did, it never looked back, right? It finally decisively cleared that 2000 level and then just went, and here we are. Um, so the gold miners, the GDX, that reminds me a lot of where gold was probably 1 or 2 years ago when it was getting rejected so many times like that. So now you're finally seeing like it's kind of like cats out of the bag. We'll see if gold corrects here. I'd imagine GDX would, at least retest. Um, but yeah, it seems like the cat's out of the bag and it's failed enough times. Now it's time to see it start working, I think.
And we talk about decisive resolutions around here all the time. You want to see a basing pattern that's well defined with a clear level of resistance. You want to see the buyers decisively take that level out. And on the GDX, if you look at the weekly candlesticks, I think the breakout candle engulfed like the prior 2 or 3 weeks. Breakouts don't get much better than that.
Yeah, and I loved what you said there about gold being very, uh, where GDX is at today. Because back then, you are right. Like we kept looking at that base, we kept saying it's going to break out, but nobody really cared at all. It did break out at the end of 2020. Things kind of changed, and the trend started kept going up, and more people just said it. This can't keep happening, and now we're all the way here at 3,500. I mean, we're under 3,500, closer and closer to 35. It's going to be very significant if this thing can get over 3,500. I think it's headed to 4,000 probably pretty quickly.
For sure. And I also brought along this long-term Fibonacci extension chart of gold futures. We know that gold peaked back in 2011 and then it troughed in late 2015. That was a very, very big drawdown. Fell almost 1,000 points. So that's a really good level to anchor your Fibonacci extensions from. And you can see this 161.8. The market acknowledged it. Price consolidated below there for several weeks. But not long, you got a fresh leg higher, and here you are at the 261.8. So not only do you have this extension level on shorter time frames, but you have a high time frame extension level here. So this is a very, very logical level for the sellers to show up.
Yeah,
Such a
no,
fractal
I love
chart,
this.
right?
Yep.
Yeah, I love that about technical analysis. You can study assets over multiple time frames.
No, I think this is great, and I think this thing's probably going to continue, but it wouldn't surprise me to see it slow down here. Like I think that's the big message from today. It wouldn't surprise me for to see it consolidate, even dip. This thing could hold trend down to, for me, 2,800. It would still hold trend all the way to 2,800. So, you'd have to really have a huge sell off for this thing to really break trend. So let's go back to the dollar, Sam.
Cool. Yeah. We talk about decisive resolutions. This looks pretty decisive to me. What about you
Yeah.
guys?
Yeah, I would agree.
Yeah, so the dollar chart, and Sam and we've been talking about this one for a while because we saw the positioning getting so lopsided at that top in the dollar that happened earlier this year in January 2025. So the top happened. We basically had speculators, which is the dumb money, if you're looking at COT report, getting extremely long, and then the smart money. Sorry, the dumb money was getting extremely long. The smart money was getting extremely short. This thing to roll over. Now it's just going straight down with momentum, straight through the downside. So, Patrick,
Yeah.
what are you seeing around the dollar on Twitter? Because that to me is like so fascinating because I put these charts together. Sometimes it's, everybody in the world is talking about it, everybody wants to read it or check it out. And then sometimes it's nobody cares. Now, recently, it seems like there's a lot of chatter about the dollar. So I'm wondering what you're seeing out there.
Yeah, I mean, everyone trying to figure out what it means, right? I mean, for the longest time, it was really inversely correlated with stocks. So weaker dollar was looked at as a good thing for stocks. But the last few weeks we saw it selling off with stocks. So kind of what is the message of the dollar? So that's kind of where the conversation's at. But I would agree with Sam. I mean, totally decisive breakdown here. And I think it's interesting. I mean, we had we were range bound for so long, and it took that breakout and then that failed to get us out of that range. And that happens a lot where you're stuck in a range and then it finally breaks out of that range and then fails, and that gets you the real uh, resolution from the range.
That
You know,
old saying that from failed moves come fast moves in the opposite direction. It's exactly
Exactly.
what
Yeah.
happened here.
well, that was something that you said the other day, which I found fascinating, which is like, just thinking back, it's like that's very true as most of the time. I mean, take it as simple as Bollinger Bands. They even inside of John Bollinger's book, he even talks about the false breakdown happening because it happens so much where it goes to the bottom band and then it just hits right through the top band. So I think it was a whole chapter. Um, so let's go to the next charts. We'll go through some of these and then we'll get to you, Patrick.
Yeah, Patrick actually brought this one along.
Thanks.
This is a great chart here. We're looking at those long-term Fibonacci extension levels that we were just talking about. And Patrick included the percent above 40-week moving average, hitting pretty close to a record high. So Patrick, is this just suggesting that it's due for some type of digestion? It's
Yeah, I
too
mean
stretchy to the
that's pretty
upside.
much it. And you hit it with the fibs. I drew them a little differently, but the point is it's reaching its upside targets and is now the best time to get long? Probably not, but I also wouldn't be quick to fade those. Um, I know it was a great signal, when we got over 20% over the 40-week moving average in 2011 and then there in 2020 there. But, you look at some of those earlier signals, I think this to me tells me that, yeah, we're probably due for a pause within that trend. But another big point about this is just the massive cup and handle that finally resolved. We talked about it as the boy who cried wolf. And looking on this chart, it doesn't look like much, but I mean that the amount of times it took to finally get that breakout, and I think by the time it actually happened, I think people had given up on the trade, and I still don't think people are positioned in a way that would be associated with like a top or euphoria, something like that. It's more of that disbelief, and people who are sentimentally bearish on it, maybe they missed out on the run, and they just hate seeing it go up without them.
What are you looking for, Patrick, to suggest that people have caught on to this uptrend in gold and maybe it's a crowded trade? Are you looking at COT? Are you just analyzing the Twitter sphere? Uh,
I mean, mostly just anecdotal. I'm not looking at the COT as closely as you guys. But what are you guys seeing at this point as far as what the COT suggests?
You go ahead, Sam.
Yeah, it's been stretched. Commercial hedgers are pretty much always net short gold. It's been pretty aggressively net short for some time. The speculators have been pretty long, but it's still not really to that level where you'd say, wow, this is an extreme. This positioning needs to correct itself, which honestly has surprised me. Now in silver, you've seen a little bit more of aggressive positioning, especially from the speculators, and I think that's kind of why silver has underperformed gold up to now. We want to talk to you guys later about silver having one of its best days in recent years relative to gold yesterday. So that could be changing now, and I think that the over positioning by the speculators has been corrected now after that pretty nasty move down. I think that came after the obliteration day on April 2nd.
Obliteration
I
day.
think it was like down 7% or something on that day. It was just disgusting. It closed at the lower bound of the day's candle. It was just a lot of forced liquidations, pretty clearly, and now we know that it was the speculators, the dumb money. They were too long and they got caught.
Yeah, and just looking at the way this looks, there are a lot of it is a bit overdone, and I think that's the thing why it's wouldn't be a surprise to see this thing go sideways for a little while. Um, but once again, these are all things that kind of put on your warning signals. The other thing for the COT report that I would say, the only thing that's concerning to me is that the extreme positioning seems like it's just starting to unwind in gold. But it's at such a slow rate, it doesn't say to me that it's really like going to be a nasty correction. It just says more side until somebody makes something very a decisive move.
Now, what did the COT look like when gold was breaking out like last year? Like March?
It was really muted, Patrick. Yeah, that's a good point. Is whenever the COT positioning gets pretty close to neutral, that's a great time to buy. You can go back decades, and that signal has been really powerful. So whenever speculators and commercial hedgers are close to flat, that's when you want to buy. And then whenever they get super long and super short, it's a great time to think about selling. I really want to talk about the silver gold chart, guys. Yesterday we had our best day since October 2022 when the S&P 500 was bottoming for silver relative to gold. Do you think this is shaping up to be a little scoop and score? sellers took control of this ratio and broke it down to new multi-year lows. But if this breakdown fails to hold, I think we could see a pretty epic scoop and score back into the range and possibly back towards the upper bound of the range.
Yeah, I think this is a great observation, and I totally missed this yesterday, and it kind of got lost in all the moves yesterday. But that's pretty notable, right? And not something that you'd expect to see if this is a top in gold. Wouldn't expect to see silver up 3% on the day when gold's down 3%. That's notable.
Totally. Yeah. And yeah, you have silver futures shaping up really nicely here. The 61.8 retracement of this nasty drawdown from $50 down to $11 from 2011 to 2020. So if buyers take control and get silver above this 35 level, I think we could look at $50 silver on our screens before long. What do you guys think?
Hey guys, sorry my mic's all over the place today for whatever reason. I'm not sure, but is my voice okay now?
Yeah,
Yeah, I can
you're
hear
not
you.
a techno king like Patrick and I.
No, I mean I am pretty good at this part of it. Been doing this one for a while, but for some reason it's like literally registering my Mac and then my microphone. Weird, whatever.
We're
And,
good now.
but yeah, so Sam, what did you just say last? Sorry, I was in the middle of technical difficulties.
No, I just think the 61.8 retracement on the silver futures is a big level. This 35. If bulls reclaim that, couldn't we see $50 silver before long?
Yeah, Sam, I think it goes back to the thing you and I have talked about forever, that huge cup and handle pattern that's going all the way back to the 70s. This is just the handle part of it. If you go all the way back, you can see a huge cup and handle pattern. A lot of people just keep saying, I've seen that chart forever. But that's how huge bases are built. And then this huge base could really lead to outer space. And this thing could really take off at any moment. So getting to 50 is the first battle, and I don't see much resistance ahead if it really gets up and over these major levels. And then we get to 50, and then we can see where we really do end up. But I think this thing is really set up for an explosive move, probably happening any day now.
For sure. That 50 level, it doesn't have a lot of price history, like this move from 2008 to 2011 was pretty parabolic. And you had a similar move back in the 1970s when the Hunt brothers were cornering the silver market. So, not a lot of silver has been transacted up here. So, not a lot of overhead supply. Could be a quick move to and through 50.
Oh, I completely agree. I mean, this thing is this and the junior miners and the silver miners to me are where the alpha is going to be at and where the money's going to be made. So hopefully going forward, silver can start to really catch up. I loved your 1 day rate of change chart. That's just a phenomenal way to look at this as possibly a huge shift in silver finally leading gold. So we got any more charts from Patrick, and then we could talk a little bit
Yeah.
about the chart report too.
Yeah, Patrick brought along this sweet chart of gold versus the S&P 500. This line has gone pretty vertical recently. That's been one hell of a move. Do you think it's due for some consolidation, Patrick, or do you think we have more room to the upside towards that 38.2 retracement?
Yeah, I mean, definitely due for some consolidation. Like you said, it's just a vertical move. And now those relative figures are just pretty staggering. I mean, looking at it, like I said, beating the S&P over a 20-year basis, I mean, that's incredible. But this is in a basing process, right? And that could take 2 more years before that base finally resolves, or maybe longer. Um, I mean, you can see, not that this is like a exact guide, but even if that base completes, it's going to take a year or two at least, talking like 2027, or beyond then, before you actually see that breakout. But the point is it's working on a reversal. And I mean, a lot of people I don't think own gold. I mean, earlier in my career, it was kind of advice that, like, you keep 5% or so of your portfolio in gold. But I think that's been replaced with Bitcoin. Now you're seeing uh, big firms like BlackRock saying you should have 2% of your portfolio in Bitcoin and things like that. And I'm not saying that's wrong. Um, but John Roque, one of my mentors and one of the best technicians out there, he has a great point that there's not too many people that have made money in gold around anymore. I mean, a lot of us weren't managing money in the 70s or even around in the 70s, right? So I don't think a lot of people really understand this asset and how much it can go up in tough times and things like that, and the role that it serves in a portfolio like that. So, I mean, I wouldn't ditch my stocks here, but I mean, if this base resolves, even if it does take a couple years, gold's probably going to be here for, a minute.
That's a great point, Patrick. This is a textbook bearish to bullish reversal pattern. And when those resolve, it's a brand new trend. The trend has been sideways for about a decade now in this ratio. So yeah, the uptrend really hasn't even started at this point. Over the short term, this ratio is very stretched. Obviously, it's just gone vertical for several months now. But yeah, I think that's a great point. We could see gold outperform stocks for, I don't know, how long do you think? A decade? Like these things don't last just a few years.
I think what makes it kind of deceptive is all those starts and stops of it. Most people aren't looking at charts like us as often as we do. So um, it's kind of hard to see it unless you take a step back and really look at it like from this sort of perspective.
No, I love the history lessons we're getting as we're having these conversations. To me, that's like fantastic, which is, understanding that, back in the day was like even when I was younger, it was, hey, you want to own some gold, gold's significant. And as I started my career in finance, it became even more significant. But as it fell in price, as it underperformed, it wasn't a staple in the portfolio anymore. I mean, even back in the day, there was the permanent portfolios where you put 25% into gold. I mean, there was a lot of them. So I love the history lesson part of this. I hope you guys are taking that away. So, Patrick, why don't we
Yeah,
go through another chart and then you can tell us a little bit about the chart report?
sure.
So, any charts you want specifically?
Oh, I mean, I just brought along, I didn't know exactly what we were going to talk about today, so I just brought some charts that were on my mind.
Oh, I love this
I mean,
one.
this one, yeah, the US has been the place to be for the last 2 decades. And it's been such a clear trend. I mean, the US has really dominated, and very few people have made money in emerging markets and any of that. But this year, that's really changing in a big way. As much as it's changed and as pronounced as that outperformance has been, this ratio is still trending lower. That might change. Jury's still kind of out. We haven't seen, speaking of decisive breakout, we haven't really gotten that decisive breakout from this ratio yet, which is incredible because it has been, I mean, the divergence between the two in terms of performance has just been really, really noticeable. But still hasn't broken out totally. Kind of trying here. So this is one that I'm really watching because this could drive a lot of themes over the next few years too.
I think this is kind of like turning a big tanker ship. This is just,
Yep.
it's going to take a lot of work for this ratio to turn around. And, we saw it bottom, was it earlier this year or late last year that this ratio bottomed? It
I
hasn't
believe
been a
it
long time,
was last
Last year.
year, maybe in October, like when China was having its move.
for sure. It hasn't been a long time. I think that's the bigger point is just this is a blip in the long-term trend. You need to see this ratio churn sideways, in my opinion, for years, at least. You need to see it stop falling over longer time frames. It really needs to prove itself.
Right. Right, and if it does work, it's gonna be one of those things where it'll kind of like the gold conversation, starts and stops.
Hmm.
And there's already been plenty of like kind of false starts for this ratio, and maybe that's what this is. Maybe, with all the tariff turmoil and all the uncertainty around that, maybe people are just hiding out temporarily in overseas because it's been beaten down so much, and maybe we'll get the rotation back once things clear up. But either way, I think this is a really important chart to watch right now.
Just
Has been
something
all.
that should be on everybody's radar for sure. So, Patrick, where can people find you?
Yeah, I mean, you can follow me on Twitter at my personal handle is my first initial P, Dunawilla, my last name, and then Chart Report. That's where we post most of Chart Report stuff, and that's an easy one to remember. Just at the Chart Report, and you can get the Chart Report if you just go to thechartreport.com and put in your email address there, and you'll get free in your inbox every day.
The chart report is so good. If you guys haven't signed up for the chart report, your life has gone horribly wrong.
I appreciate that.
No, I've
I
been
try
on.
I try to feature you guys in there as much as I can, and it's
We
pretty frequent.
appreciate
You guys
that.
have some pretty great charts in there.
It's not just us though. Like there's a lot of great technicians out there that go unnoticed, and you do a great job of highlighting that every single day.
Oh, thank you.
Yeah, that's my favorite part about it is that I can always find like new traders that I actually want to be paying attention to inside of Twitter, which is something that I really don't do much is try to really look and search out other people, but Chart Report makes it easy. So, all right, guys, we can end it there. Thanks so much, Patrick, for coming on. Sam, thanks for co-hosting with me as always, and make sure you guys follow us at the Gold Rush. Sam, did we actually bring slides for that? I didn't ask you.
No, if you want more information about the gold rush, there's information in the description. You can get a link to see what we do, but we cover commodities every single Friday. We're talking about crude oil, we're talking about cocoa, orange juice, lumber, all kinds of different commodities. We outline trades there. We outline different stocks. Whenever energy is trending well, we're going to outline a ton of energy trade ideas. We talk about gold mining stocks all the time. We've had some huge winners in the gold rush recently. We caught the breakout in the Orla mining, ticker ORLA. I'm not sure if you all have seen that, but boy, has that been a nice one. Probably the best gold mining stock in the entire universe. Just a brand new parabolic uptrend. We caught the breakout there. That's been pretty awesome.
Yeah, so definitely check us out at the Gold Rush with All Star Charts. I'm Jason. I'll see you guys soon. I'll be out for 2 weeks coming up. Sam will be running this, I'm pretty sure, right, Sam? All right.
Yeah,
Sam's
we're
going
gonna
to be
have some
running
fun
this.
without you, Jason.
That's good. I'm happy for everybody. But yeah, it's for 2 weeks, and then I'll be back after that. So see you guys soon.
Cool. This was fun,
Awesome.
guys. We'll catch
Yeah,
you
thank
later.
you guys for having me.
Adios.